Are you ready for the upcoming ownership coin super cycle? If not, make sure to buckle up and watch this video where I will show you how to position yourself best for the upcoming ownership coin super cycle. Welcome back to On-Chain Trenches. As always, my name is 𝗬𝗵𝘁. And today we're gonna talk about MetaDAO and why I think that ownership coins are about to enter a super cycle. Today we are gonna talk about why most ownership coins are highly mispriced. I will make the argument why we are about to enter the iPhone moment for ownership coins. But we want to stay reasonable, hence I will also outline current shortcomings of ownership coins and highlight some flaws and how they could be resolved soon. And towards the end of this video, I will give you my top picks of ownership coins that are criminally undervalued in my opinion. So enjoy! Today's video was highly inspired by a blog article written by 𝗬𝗂𝗺𝗀𝗃, the co-founder of Drift Protocol, and he named this piece "Ownership Coins Are Mispriced." Of course, I read it all for you, and today I will break it down step by step so that you get the concept and the gist out of it. But if you want to read it for your own, you can find the link to the blog post in the video description below. All right, let's jump in. So here is the high-level overview of what 𝗬𝗂𝗺 was trying to say with his blog post. So there is currently a big mispricing of ownership coins. He starts the article off with comparing governance or meme coins to ownership coins. And as we all know, today's governance or meme coins tokens, they have no robust claim to assets. So you, as an investor, don't hold any strong rights to the money raised or the protocol itself, since most of the time there is an equity part and there is a token, and the line between these two is very blurry, and in most of the times, token holders have no claims on the underlying cash flows, while equity holders do. There was a recent example of the Light ICO, and they raised 20 million, and now just a few months later, this very token trades at a market cap of 3 million. This is not possible with ownership coins, because ownership coin holders can always claim back their treasury. But yeah, in the case of governance or meme coin tokens, that's not possible. Hence, we see here the ghost. I mean, the treasury and all the protocol revenue is gone or not accessible to token holders. If you compare that to ownership coins, which are being invented by MetaDAO, so all the coins that are launched on MetaDAO are native ownership coins, and they come with a robust claim to the treasury assets and all the protocol's future cash flows. Very, very important to highlight this. So Futurkey basically controls here the treasury, all the money that investors initially put into these projects. And they also have very, very robust claims of all the future cash flows that is generated by the protocol that they invested in. One very novel feature that is uniquely enabled by ownership coins is the liquidation of the treasury. As we see here in this chart, the straight line represents the treasury value, and here the fluctuating chart represents the token price. And the moment the token price drops below the treasury, investors or token holders can come in and raise the proposal to liquidate the treasury, because then they can catch this arbitrage. Token price trades here, but the treasury is worth more than the entire market cap, so they can immediately capture this arbitrage, which is not possible with meme coins / governance coins. As we see here, the treasury is at 20 million while the market cap is at 3 million, but token holders have no right to claim back their initial investment. And that's the novel innovation of ownership coins. As you see here, opportunity number one, a free call option the moment the token trades under the net asset value. This is basically the entire concept I just explained to you a second ago. So here, investors come in, they buy the token below the treasury value, and the worst case scenario is that the treasury gets liquidated and the investors are made whole. So you capture that gap between the token price and the treasury. And the best case scenario is that the founders get galvanized, they ship new features, and the market momentum shifts, and you bought this token at a very, very low price, and now it just goes parabolic. And then there is a second opportunity, which is slightly more complex, and I will explain it to you in more detail in a minute. But the TLDR is that we as investors are trying to estimate the enterprise value of those protocols, aka ownership coins, by extracting the treasury value from the intrinsic enterprise value of the protocol. And this can uniquely be done when the entire market cap of a coin is mostly based on its treasury value. Hence, the market pays very little attention to the implied or the inherent value of the protocol itself. But yeah, let's take a closer look at that. Cool. Now let's look closer to the data. Those screenshots are taken out of the blog post by Squid. So big shout out to him for making that public. And yeah, what he did here, he listed all the ownership coins launched on MetaDAO and listed here, very importantly, their book value, which is nothing else than the money that is currently sitting in their treasuries. And then he divides here the treasury worth by the circulating tokens and comes to the implied price. So for 𝗬𝗁𝗁, they have a treasury worth more than 5.7 million. Hence, the fair price of the treasury should be 57 cents. But currently, 𝗬𝗁𝗁 is trading closer to $6. So this leads us to an implied enterprise value of 53 million. And the enterprise value is nothing else than the current market cap minus the treasury. And he does the same here for Umbra. But like here, there is no big difference since the treasury is relatively small to the enterprise value. So here, for us as investors, there is no big mispricing or opportunity where we can step in and benefit from the mispricing. But yeah, let's move on. Here it becomes more interesting. For Loyal and Pace, we see here that their treasuries are like this number. And if we divide the treasury by the circulating tokens, we see that the current price is lower than the implied price. So now you could buy those tokens at a discount to their treasuries. And that's exactly the asymmetric opportunity that I outlined before. So in the worst case, you capture that arbitrage by liquidating the treasury. As we see here, the implied enterprise value has a negative value. It's like less than what the company is currently holding in its treasury. And in the best case, this token just does a 10, 20, 30x. So there is very little downside for you as an investor. Let's go one step further where it becomes super interesting. It is where like solid companies or solid founders, solid protocols like Solomon or 𝗬𝗂𝗹𝗺, they don't trade at a discount, but they just trade slightly above their book value or their treasury, which we see here, especially in the case of Solomon. So the implied price based on their treasury holding should be 80 cents, and the market currently values them at $1. So we have an implied enterprise value of a little bit less than 2 million. So here, all of a sudden, we have a big difference between the implied enterprise value and the treasury. So you are now basically paying 2 million for a protocol that has been live for more than 1 year. It went through October 10th, a lot of liquidation cascades. It weathered that storm and nothing happened. It is just more battle tested as of now. And yeah, the implied enterprise value is 2 million. If you still haven't grasped it fully, I totally understand. It took me a while to fully grasp it as well. That's why we have to introduce this table here to get a better picture and a better understanding of what's going on here. What we did here, we simply copied the implied enterprise value of these tokens and put it here. And now we are trying to estimate the value of the protocol itself. We're fundamentally asking, what would VCs pay today, or how high would they value this protocol today if they had to invest in the team? And I mean, those are just gut estimates by the author, But he said if 𝗬𝗁𝐺 would raise today from investors, they would basically raise in the area of 50 million, Umbra somewhere between 15 million. Then here he said that Loyal and Base are very early projects, so they are pre-seed, so they would have a hard time to raise more than 500,000. But here, as you see highlighted in green, that's where like this super cool opportunity comes up for us. It is here we see Solo implied enterprise value at 2 million, and he said if they were to raise money from investors today, they would raise somewhere between a valuation of 10 and 20 million. I mean, of course, everybody can come up with their own numbers, but if we assume that Solo, like the protocol that the team built over the last 1.5 years, has a estimated value of 15 million, but based on our calculations here, the implied enterprise value is only 2 million, then this should be a very good bargain, I guess. And the way he calculated this number here is by taking the estimated enterprise value, and on top he added the treasury of 8 million, which gives us a total value of 23 million, which he then divided by the circulating supply, and this gives us an implied token value of $2.30. If we compare that with the current market price of $1, investing in the Solo token does not become a no-brainer, but a very lucrative investment if you look at a risk-return perspective, because the upside, as I highlighted here, is a 2 or 3x from the current market price, while the downside is arguably max 30-35%, because as we know, the moment here this price drops below the implied price, we can always ask for a liquidation of the treasury. So the downside is 30%, while the upside is 2 or 3x. And those are exactly the asymmetric opportunities that we are looking out for. And full disclosure, I do own some Solo tokens. All right, let's move on. Now you might ask, but what if we enter a bear market? How will ownership coins behave in bear markets? If there is always this arbitrage opportunity, will they just get liquidated, or how does it all work? Can they potentially go to zero? And I mean, everything is possible. I think if we enter a prolonged bear market, then most ownership coins will drop below their treasury and will eventually get liquidated. So your downside is capped to -20, -25, 30%. Eventually somebody will step in and arbitrage out this opportunity. But what I think is way more likely is that founders will stick around and just keep shipping and building throughout the bear market, since they have a big incentive to do so. Because if the founders leave, they get nothing in exchange. They have no tokens, and all the money they raised can be taken back by the community. And if they want to take some financial profits out of this product, they better make sure that their token pumps, because that's the only way that they will receive their share of tokens. So that's what we call performance-based unlocks in the ownership coin world. So how it works, founders only receive coins if the price of the token goes up by 2x, 4x, 8x, 16x, and 32x. So here, if all of these milestones are met, then founders get 20% of their token allocation. 20% here, another 20% here, another 20% after 8x. But this does not happen immediately. There is always that cliff period of 16 or 18 months. Only then those tokens will start to unlock. So this highly aligns investors with founders, since founders ain't run away and they're incentivized to make the token price pump, which makes all the investors happy. Sweet. And here's another post that I really wanted to share with you guys. I came across it on Twitter, where 𝗪𝗪𝗿𝗀 said that he finally started to believe in something again, because ownership coins, 𝗬𝗪, and MetaDAO are teaching him and everyone else that are investing in ownership coins again how to hold. Because now, after years of bad tokenomic designs, rugs, and exploits, ownership coin holders no longer have to worry about insiders, team members, or VCs sitting on massive discounted bags ready to dump on you and me, the retail investors, the moment the token goes live. Then he continues saying, every time I see a project launching an ICO outside of MetaDAO, I ask myself, why the heck would I join this pre-sale full of insider team VC tokens with lots of hidden structures and backdoor deals? And yeah, the simple answer is I want, because now MetaDAO offers us an opportunity to those shenanigans. Furthermore, he says that MetaDAO is to ICOs what Pump Fun was to meme coins. We are entering the iPhone moment for ownership coins, aka ownership coin Supercycle. And here I have prepared like a beautiful comparison, so some stats to underline what we are discussing here. Those are very famous projects that had their ICOs this year, not ownership coins, like Plasma, the XPL token, Pump Fun, and Monad. They are all down from their ICO prices because people got in at way lower prices, and there is a lot of hidden supply and just people waiting to finally exit their bags. And if you compare this to ownership coins like Solomon, Avicii, or Umbra, they are all up considerably from their ICO prices. And talking about the ownership coin Supercycle, here again, 𝗪𝗵𝗁 continues and says, he genuinely thinks that we are heading towards a moment where if a project isn't launching through MetaDAO, people simply won't participate because folks investing in other ICOs don't know what they are buying or don't know what they are owning. Yeah, purchasing those tokens. Is it just a meme token? Is it a governance token? Does it give me ownership of the equity? What happens with the treasury? What happens with future cash flows? There's just a big question mark in the air, and MetaDAO and ownership coins solve all these issues for investors and make me and other folks out there way more comfortable holding on to these coins long term. Ownership coin Supercycle. Now you might say, hey Seb, stop for a second. You're only shilling ownership coins here. There must be a twist or there must be some flaws. And I fully agree. Nothing out there is perfect and every single investment comes with its own risk. Hence, always do your own research. I'm just trying to share with you guys out there my personal investor journey and how I reason and think about every investment. And lately, I'm just intrigued by ownership coins because I really think that they solve a lot of issues that surfaced over the last couple of months and year in the crypto industry. But this does not mean that ownership coins are perfect. They still have some flaws. And I am super stoked that Prophet, the co-founder, addresses them publicly and admits that they are not perfect, but they are continuously trying to improve the protocol and make ownership coins better every single day. So what he says here is that there are two big pushbacks on the ownership coin model that he gets on a weekly basis. So the first one is giving up control sucks for founders, because as we've seen, the moment this ownership coin is formed, the treasury moves into the feudality controlled governance mechanism. So the team members no longer have full ownership over their raised funds, which gives investors protections, but it also might feel some owners uncomfortable because they have no longer full control over the raised funds. And Prophet says, like, agreed. And the team is currently working on improving that so that investors still can make sure that the founders are not running away with the money, but giving founders a little bit more liberty of how they want to spend this treasury. And hence they are introducing optimistic governance, but more on that in a future video. And the second major critique that ownership coin skeptics have is that having liquid token sucks for founders and causes them to focus on the short term. I mean, there is definitely some merit to this statement, but Prophet says that he disagrees with this point because there are definitely pain points, he says, with having liquid tokens, but he thinks it is incredibly useful to have a high surface contact with reality and public markets from day one on. Having a liquid token forces you and the team to ask yourself every single day, are we really moving the needle here with what we are doing? Are we shipping fast enough? And I really have to say, those are super valid counter arguments to this argument. And here you see I added that little Facebook logo, because Mark Zuckerberg once said that he wished he took Facebook public earlier, because the benefit of being a public company and being forced to issue quarterly reports forces a level of discipline on you that you don't get in private markets. And that's exactly the behavior that I am witnessing with ownership coins these days. Just look at Solomon or 𝗬𝗁 and their founders, or MetaDAO themselves. On a weekly or at least a monthly basis, they are coming out with reports sharing with their community how they are doing, what they have achieved over the last week, how the user metrics look, how fast their protocol, their users, their revenues are growing, whether they hired new team members, what they are currently working on, what they are planning to ship in the upcoming weeks and months. And this just creates closer alignment between token holders and the team. It creates this transparent framework. Everybody knows what's going on there. And I mean, it's not that they're doing it because they like it. It's because ownership coins are forcing this behavior on them, because the moment they stop being transparent with their token holders and share what's going on inside the company, the token holders can just raise the proposal to claw back the treasury and liquidate it, so the founders run out of money. So this is just, yeah, a very, very cool concept, if you ask me, which creates high alignment between team and investors, and most importantly, holds everyone, especially the team, accountable for their actions. Cool, that's it for today. Thanks, guys, for watching, and please do me one favor. If you enjoyed this content and got some value out of it, make sure to hit the like button and subscribe to the channel below. This very much helps me to grow this channel, to spread the news about ownership coins and everything else that's going on in the on-chain trenches, especially in Solana. And if you would like to know my personal portfolio holdings and all the ownership coins in there, please join us at 𝗬𝗶+, a private community of passionate DeFi users, on-chain trenchers, NFT lovers, and so much more. All right, that's it for today. See you in the trenches. 𝗬𝗵𝘁 out.